The competition among low-cost so-called robo-advisors is heating up in Canada's wealth management industry, with the newest robo-advisor entering the marketplace earlier this week. Joining us now is Pramod Udiaver. He's co-founder and chief executive officer of Invisor Investor Management. Thank you very much for being here.
Thanks, Paul.
We were talking just before we came on air that not everybody likes the phrase robo-advisor. You may not like it very much. I was at a conference of mutual fund people a couple of months ago, and they were talking about lower fees, perhaps being mandated in their industry. They use the phrase robo-advisor almost as a cuss word. They don't like it at all. Tell us about your company, and what do you think about the label robo-advisor?
Sure. So Invisor offers Canadians a new way to invest by using our online personalized investment management services. We offer these services at a very affordable, a price level, and we make it very appealing using technology. Really using technology to make the client experience very easy, simple, fast, and easy to use.
What do you think of the phrase robo-advisor?
Well, my view is that the phrase really doesn't represent what we do, and that's because we really are financial professionals behind the scene. All we do is we use technology to make the client experience really good and easy for Canadians to access the service. So it's not about a robot. And I really want to use an example of a flight. There's a lot of technology on most aircrafts these days, but it's really the pilot. It's a human that's actually driving the flight, taking the passengers from point A to point B, and it's the crew that supports and creates a great experience for passengers. So we are very similar. It's financial professionals driving the business.
So tell us the experience then that a first-time client of yours would experience. Let's say I'm a 30-year-old person and I've been in the workforce for several years. I want to start saving for my retirement. I want to start saving for a down payment on a house. I've decided I want exposure in the equity markets, the fixed income markets. What's my experience with your company?
Absolutely. Like you said, we get started with the goals. So whether it's retirement, whether it's education funding, whether it's saving to buy a house, whatever that might be. So we get our clients to really focus on the goals. And the online experience we've built is really to get them to focus on it, and so that we can learn a little bit more about their goals, their personal situations, their risk tolerances, and thereby be able to offer a recommended portfolio for each of those goals. So back to the point that we are really getting them to focus on the goals, rather than them having to worry about what investments to buy, what stocks to buy, in what proportions, when to rebalance. We take care of all of that and get them to focus on their goals.
Many so-called robo-advisors focus on ETFs. Diversification is important in portfolios. Everybody agrees on that. ETFs are a low-cost way to achieve that. Do you recommend ETFs, or will your clients be advised to buy ETFs, or do you do you have a wider look at possible options than that?
Absolutely. So we believe ETFs are a very efficient way to gain exposure to different asset classes, but we don't stop there. We go beyond that. We don't want to discount or throw away the actively managed products. There's a ton of low-cost mutual funds that are available to fee-based advisors. We use them, where we think it's appropriate for the client situation. So we are not stuck to just the ETF segment. We go beyond that.
What type of fees does a person pay when they use your service?
So at the highest marginal rate, they would pay 0.6%, which is a fraction of the cost that clients typically are used to paying in the industry, and that goes down to 0.3% for assets over $500,000.
And the fees of the assets they hold, if they're holding ETFs or mutual funds, those fees would be on top of the fees that you are charging.
That's right. So there's an average management expense ratio in our portfolios of about 0.2 to 0.3%. So when all of these costs are put together, most of our clients are at the 1% level, and that compares to 2.5%, where mutual funds charge about 2.5% these days for equity products.
And am I correct in assuming that you're targeting younger people? I spoke last week to the Desmarais brothers of Power Financial Corporation, and they also are interested, are developing that company as Power Financial, a robo-advisor style service. And the comment that the Desmarais brothers had, they are the top two people in Power Corporation, is that younger people will be content with a robo-advisor. But as they get older and as they become more affluent, they are going to want to transition to a human being, a human advisor. Do you see it that way as well?
I would say yes, because I think the younger generation is more familiar with using technology and making decisions online, but that doesn't mean that there's a generation beyond that is not. I think a lot of people, even up to the age of 50, for example, that are very familiar and very adept to using technology and making decisions online. And in our client base that we currently have, we have a segment that's pretty wide.
How many clients do you have? How much assets under management do you have?
We just got started, so our numbers are pretty modest at this point. But we've been in a pilot basis, running it for a couple of months just to make sure that our platform is robust and can be supported for a full launch. And we just launched a couple of days ago.
And what is the website that people would go to if they're interested?
So they would go to www.invisor.ca. That's invisor.ca.
Thank you very much for joining us.
Thank you, Walt.
That was Pramod Udiaver. He's robo-advisor. He's Chief Executive Officer of so-called robo-advisor firm Invisor Investor Management.